we have the budget coming up, the last full budget. Maybe the government needs to do that capex push, but if the rural consumers hurting in the recent past is any indication, that piece of the puzzle isn't solved either. So it's a bit of a tightrope. How would you look at what are the policy choices before, and what is it that might please you as somebody who watches the economy so closely, versus what is it that might uh, stand out as a sore point, depending on which choice the government makes?
Sure. So let me take your first question first in terms of policy choice. I think the trade-offs, I would say, are becoming less stark. In fact, 2022, while it was a decent, good year on the growth front, it was a lot more challenging year for policy because we were also trying to deal with inflation and currency-related challenges. So the trade-offs were quite stark. Incrementally, some of those pressures are easing off. Inflation, of course, core inflation is still sticky. But given the moderation in commodity prices and the expected moderation in growth, some of these inflationary pressures will ease off. And oil coming off itself also implies that the trade deficit starts to narrow. So the trade-offs are less stark. And for monetary policy, therefore, it's, the RBI has effectively taken the reverse repo rate 335 to an effective repo rate of 6 quarters. So it's been nearly a 300 basis point rate hikes in a very short period of time. Now, monetary policy works with long lags. Global growth is going to slow down. Commodity prices are under check. And therefore, core inflation will come down. So we do think that the monetary policy tightening cycle is more or less behind us. There will probably be a last hike in Feb, post which policy goes into a pause. And if we are right on the growth inflation outlook with both looking weaker, then in fact, we think monetary policy could very well move into an easing mode also in the back half of FY24. Now, on the fiscal side, the weaker growth outlook will mean the buffer we had this year in terms of higher tax revenues will not be there next year. So we do think consolidation is going to be more difficult next year. And the point you made around rural being weak, I think one of the biggest challenge for rural consumption has been high inflation. So to the extent that inflation is easing off, real rural incomes actually should do better. So in fact, when we studied the past global slowdowns and impact on India, it is exports followed by a pretty significant impact on investments. And consumption ends up being a relative buffer. Again, within consumption, you would expect the urban discretionary side to see a bigger hit compared to rural, which I think should hold up given inflation is actually coming down. So the need for the government to essentially focus on front loading their public capex projects continues, but fiscal consolidation is going to be challenging. On the second part of your question of what we see in the macro framework, which will make us positive or negative. Now, I mean, we do think that a lot of the challenges that India is facing today are global spillovers. There is nothing that India has sort of done wrong. If anything, balance sheets are much better both for banks, corporates, policies generally are prudent. So India also has the ability to bounce back faster. Let's say on the other side of the global slowdown, because some of the headwinds today will turn into tailwinds. For instance, commodity prices coming off is a positive terms of trade shock. Fed, in our view, will go on a hold after March and then start easing after September. So financial conditions will ease and investors will look for a stronger growth story. And we do think India will see a V-shaped rebound in calendar year 2024, where we're expecting growth of about 6.7%. So